This is the most analogous money supply to Bitcoin. Major fraud, and then we build back up. The more important, interesting thing, I think, is that hey everybody, welcome. My name is Matthew. Thank you very much for joining. We're going to take a break from the national debt. We've finished our series on the United States debt in the last many videos. If you've gone through all of that, kudos to you. But today we're going to have a little bit more fun. We're going to look at Bitcoin compared to the global monetary base. Now, I haven't actually shown this chart in its totality with the trend lines before. So keep in mind, this is original research to what I do on this channel and with my quarterly releases that I do on my website each quarter, release that on Twitter as well. We have the global monetary base here, but what I'm showing you is on the right axis. Remember, this is simply all of the money that the central banks control. The core of the system, the monetary base, this is the money that is most analogous to Bitcoin in the fiat world. When Bitcoin started in 2009, the monetary base was a little over $7 trillion equivalent. Remember, this is not just dollars, this is euros, yen, yuan, Brazilian real, Argentinian pesos, many different currencies. We're growing here, and then we explode during COVID. Got up to 30 trillion global monetary base, and they're trying to normalize that. As they always say, it's down to about 27 trillion approximately at the moment. We're going to now compare the Bitcoin market cap to this amount, and then we're going to draw a trend line over that and see how that looks compared to the other trend lines that I've drawn. So I'm going to show you right now, this is a percentage. What is the Bitcoin market cap relative to this purple line, relative to the global monetary base? As you can see, it looks very similar to the Bitcoin price chart, okay? But this is not price. This is a percent of the global monetary base, okay? So when Bitcoin was at around $20,000 end of 2017, that market cap of Bitcoin at that time versus the monetary base, which is 20.8 trillion at that time, Bitcoin's value was 1.5% of the monetary base. Fell down, looks very much like the price chart because the monetary base is more stable relative to Bitcoin as it's being adopted. So you would expect that. It's not exactly the Bitcoin price chart though, okay? We have the two tops here in 2021. When I say it's not exactly the Bitcoin price chart, I mean it doesn't exactly follow the peaks and the troughs exactly. And we'll see that here. So again, monetary base is exploding during COVID, but so is Bitcoin. So we have the two peaks here in 2021 where Bitcoin gets to around almost 4% of the monetary base. And I think it does hit it here. Let's zoom in November. Yeah, so in November 2021, it does get over 4%, 4.2% or so of the monetary base. The Bitcoin market cap, 4.2% of the monetary base. Lots of slides here in 2022 into 2023. We have end of 2022, FTX files for bankruptcy with apparently zero Bitcoin on its books, major fraud. And then we build back up. The monetary base as well is falling during this time after the Jackson Hole summit. A lot of Fed speak. They said that they're going to try to finally rein in the inflation and raise interest rates, which they did. So the monetary base falls. When they raise interest rates, the monetary base will fall. When they lower interest rates, the monetary base will rise. All right. So we see that there's a big crash, if you will, or decline in the percentage of Bitcoin's market cap versus the monetary base. It goes all the way down from over 4% in 2021, goes all the way down to this nadir in the end of 2022, only about 1.2% of a monetary base at that time of $27 trillion, okay? And now it's going back up. With this latest bull run, we are already at, let's zoom in just to catch the actual peak, which looks somewhere like here, 5.3%, March 2024. 5.3% of the global monetary base, which is $27.2 trillion equivalent. That includes all the euros, yen, yuan. That is in paper and coin form, the actual physical currency in circulation, plus bank reserves. Bank reserves are simply the regulated bodies of the financial system. What is that? That is a bank. All of the bank's main accounts that they themselves hold with their central bank. So that's what's called high-powered money or base money or the monetary base. I've talked about this many times. This is the most analogous money supply to Bitcoin. It's not your own checking account. It's not a money market fund. It's none of those things. It's whatever cash the central bank of any financial institution prints. And when I say, quote, prints, of course, they physically do this in the case of paper notes, or they mint coins. Sometimes the Treasury does that, but regardless, it's still the monetary base, plus the bank reserves. All right, and the bank reserves are that master account that every bank will hold with the central bank. These are the things that they can turn on, turn off at will. This is the printing press. It has a physical component, a digital component. That's the monetary base. So what's very interesting is, yes, this is pretty similar to the Bitcoin price chart. You can see this percentage penetration of the monetary base, the Bitcoin market cap. All right, and we're at pretty much all-time highs, 5.2% of a monetary base that is about $27 trillion equivalent. We can take this further now. How's that relate to the trend? All right, now this is very interesting. Take a step back. Let's think about the growth of Bitcoin, not just in terms of monetary value, but the narrative. I'm going to draw a trend line. This projects out to 2030, which is fun. We'll talk about that in just a second. But let's put the bands on, and let's even put this in log scale on the left. And let's take off the monetary base, just so you're not confused. I'm taking off the right axis there, the line that's actually the monetary base, just to look at this. Okay, remember, this is a percentage of the monetary base, and it fits, as is typical with Bitcoin, the power series, or the power law, the power regression trend line. That's what it fits with a 95% R squared. 2011, we have a couple hacks in Mt. Gox. The first hack, one of the major hacks, happened here in 2014. I have it on the chart. About 650,000 Bitcoin were originally lost. Many of those have come back, and eventually will find their way back to their claimers, people that have claims now against Mt. Gox. But let's just look at the percentages in the tooltip here. What do you see for all of these percentages? 0.0. Okay. What does that mean? That means the Bitcoin market cap at this time, 2010, 2011, 12, 13, all the way to 2014, maybe a little bit of a 0.1, but Bitcoin was a flea as far as what the monetary base represents. The monetary base is an elephant. Bitcoin is a flea. It's not even registering. And to be sure, during this time, if you go to the Bitcoin Obituaries website run by 99 Bitcoins, they've followed this since early days, 2010, 2011, when Bitcoin was a flea as it relates to the monetary base. Bitcoin was declared dead the most during this period, especially after this 2013 top, where Bitcoin was over $1,200 per Bitcoin and then eventually fell down to under $200 per Bitcoin in the depths of what they call the crypto winter here, 2014, 2015. Taking a moment to remind you that this show is brought to you by Trezor, home of the original Bitcoin hardware wallet. For over 10 years now, Trezor means business in Bitcoin security and functionality. When using their wallet software Trezor Suite to connect to the Bitcoin network, you're automatically connected via Tor, protecting your identity and giving you full control of your coins in a fully open source manner, both on the software level and on the hardware level. So head on over to Trezor.io to grab your brand new Trezor Safe 5 with a secure element, as well as a ton of available accessories to back up your keys and keep your coins safe. The most Bitcoin obituary activity was here. Then there was a little bit of a revival. 2015, 2016, we have people like Blythe Masters saying that it's going to be blockchain, not Bitcoin. The major proponent of the CDO, I remind you, is Blythe Masters, what basically brought down nearly the global financial system in 2008, just junk CDOs, junk mortgage-backed securities. Ms. Masters was the queen of blockchain during this time and said it's all going to be blockchain, not Bitcoin. So again, Bitcoin's still under the radar. Nobody's paying attention. We get to 2017, that top of $20,000 per Bitcoin. What is the percentage penetration of the monetary base at this point? Still very small. In the green there on the tooltip, you see it's 1.2%. That's the actual penetration. You see it's at the top of the percentile bands. Okay, so you see it's a very rare event because a 2 sigma up move would be 1.6%. And Bitcoin did hit that on its top December 16th, 2017, right there. All right, so Bitcoin did make a 2 percentile move. That means 95% of the observations are below it, actually 97.5. All right, so, but look at the trend line. The trend line is only 0.2% of the monetary base at this point. And then we fall back down again. So we fell back down again here in 2019, 2020. We're still, Bitcoin is about 1% of the monetary base. Now let's put the monetary base back on so you just understand what I'm talking about here. On the right axis, the monetary base in the purple line, in 2019, a $20 trillion monetary base, all right, 1% of that, it's only going to be 200 billion, is the value of Bitcoin at this point. And then during COVID, we finally had sort of in the same realm of meme stocks, and of course, Bitcoin is not a stock at all. See porkopolis.io/top money, my website, to understand more of that. Bitcoin is base money. But when the meme stocks occurred and people were trading like mad and there was money printing like crazy at home, this is a worldwide figure, remember. We went from a monetary base of pre-COVID 20 trillion to height of COVID 30 trillion. Bitcoin still increased in a major way, all right, during that next boom, to where, as I said before, it got to about 4%. Let's just zoom in. 4% in November of 2021. Okay, it was a 1 sigma move up. And then both the monetary base and Bitcoin had been retreating last couple of years to, again, where we are now. Look at the monetary base, 27 trillion and change. Bitcoin as a percentage of that, about 5%. Where's the regression trend line at this point? 6%. So the power regression is a very good fit for Bitcoin, not just on the price, not just on the market cap, not just on addresses, not just on hash rate, but as Bitcoin as a percentage of something that's completely exogenous to it. And in fact, exogenous to the financial system, which is the central bank monetary base. It's a monopolistic thing that neither you nor I nor anybody else can do, is print money. Central banks have control of that. $27 trillion equivalent is that value. That is what Bitcoin is. Bitcoin is outside money. It's exogenous to the system. It's exactly the same. It's outside money. So if we look at this as far as a percentage of one versus the other, i.e. the penetration, the global position that Bitcoin is relative to fiat money, it's moving in the same power law trajectory as price, market cap, hash rate, address growth. So that's very interesting. Let's clean this up a little bit. Let's take off the monetary base. Let's take off even 1 sigma down, 1 sigma up. All right, again, the power regression, 6%, Bitcoin itself, 5%. Let's keep growing this out to the end of the decade. All right, everything inside the red bands would represent a 95 percentile move, okay? All the way out to the end of this decade. You're looking at the tooltip. By the end of the decade, Bitcoin is projected to be worth 50% of whatever central banks print in the world. Now, a lot can happen between now and then. I'm of course not saying that that's going to happen. Some people theorize that hyper-Bitcoinization will blow off this chart in its entirety, and a few billionaires buy a lot of Bitcoin, and Bitcoin will never return to these levels. But we haven't seen that, all right, in the past. This is a 95% R-squared relationship, which simply means that, as you see in this case, the green area, the percentage representation of the monetary base that Bitcoin takes up, simply moves around that black line 95% better than it would over the all-time average. So, of course, this is a very well-fitting interpolation, well-fitting regression, very, very well-fitting. Some people claim that we could have hyper-Bitcoinization at some point. Some people claim Bitcoin is going to zero. But the more important, interesting thing, I think, is that as every day that passes, this black line has more and more validity as to what the financial markets are doing. So again, if we're looking right now, the Bitcoin percentage is about 5% of the monetary base. The trend line is 6, so it's pretty close, right on trend. If we go out to the end of the decade and it says 50%, what does that mean? It's not telling you what number either will be, but it's telling you, for example, let's say they just keep money printing like this. They soft default, because big governments are never going to hard default, just say we're not going to pay you back. So they keep soft defaulting via inflation. They print more and more money. Let's say the global monetary base inflates to around 100 trillion by the end of the decade. This tells you that Bitcoin would be worth, based on this trend line, 50 trillion in market cap. That is an interesting projection in my opinion, and most importantly, as I just said, it's very interesting that it still follows the power law that it follows for price and market cap and address growth and hash rate. 95% R squared, and this is comparing two completely separate things. That is Bitcoin the system via market cap versus the global monetary base, which is all the central banks in the world, which is research original to my website and my work, which is about $27 trillion at the moment. And if you follow the power trend line to the end of the decade, Bitcoin will be 50% of that value by the end of the 2020s. Let me know what you think of that, please, in the comments. Thanks for watching.